Okay, hello everyone, hello FuTech traders, and welcome to this weekly trading roadmap for the week starting the 3rd of August 2015. So what I'm going through today is a few of the event-driven risks, some of the market structures in some of the key markets that I trade, the Bund and the Euro stocks, and we'll take a look at what possible opportunities we could have in the upcoming week. So just to get this started, I'm going to go through some of these um, market data points and central bank policy events, and then we'll take a look at some of the market structures really quickly before we close up with the risk and money management plan. So taking a look really quickly at Monday, we've got quite a bit of data for Monday. We've got the European manufacturing PMIs, those are final, so expect a few different numbers to come out, obviously the German one being quite important. With the US ISM manufacturing, which is for me one of the key events for the day, and the US PCE core month on month, which I should have bolded that as well. Um, Also really key, done that twice. And moving on in the day, we've got the US Fed speaker Powell, which is a voter and a hawk speaking, so keep an eye out for him. Going into Tuesday, we've got only really UK construction PMI from a data point perspective, and then the Australian RBA cash rate target. So their central bank policy meeting is on Tuesday, so keep an eye on that if you're trading the Aussie dollar. With the Aussie looking particularly bearish as of recently, but coming into some pretty strong support as of recently. So moving on to Wednesday, we've got the European Services PMI, UK Services PMI, the retail sales, and the US ADP employment. Before we take a look at the US ISM non-manufacturing, also a very key figure, just before the US DOE crude oil inventories, which takes place every Wednesday. And last Wednesday, we actually saw on that figure a pretty sharp short covering rally, as there was a bigger draw than expected. So keep an eye on that figure to see if there's any sort of volatility around that. Coming into Thursday, we've got the Australian unemployment, which is, as ever, very key to the policy uh, in of the RBA. We've got the UK industrial production, UK manufacturing production, and then probably the biggest event of the week is the UK BOE bank rate and inflation report on the same day. So what we're getting out of the Bank of England is not only their rate decision, but also their inflation report. So um, what's important, obviously, to take a look at in this event on Thursday, because since we're getting so much information all at the same time, um, you want to, I think, especially for this event, is make sure you're digesting everything and not hitting straight away. Now, in your scenario plans, in your scenario analysis, that's one thing that I'm going to be doing, is definitely highlighting the fact that anything that comes out, unless it's a hike, which I think is highly unlikely, very unlikely. Everything else in the inflation report is going to be, pretty key. But try and digest the information as it comes, and read through it before you take any sort of position. I'm not quite sure because in my ITC report, it doesn't say that whether we have the minutes, but from what I read somewhere, that we also have the minutes on Thursday. So if, let's say, we do have the minutes on the same day, keep a close eye on whether we get a dissenter for a hike, and then that'll probably have a first initial reaction where, let's say, the GBP starts rallying, we get some short positions initiating into the bond markets. But then I think as we go along in the inflation report and then in the press conference, Carney is probably going to control more a curve play rather than anything else. So I think what we're seeing mostly with these central banks is really they're trying to control how the curve flattens or steepens and whether it's warranted in its current position. So uh, since the last since last month, what we've seen on the UK curve, across uh, across the curve really has been some relative flattening. So as you can see here, the purple line being last month's curve, and then this yellow line or orangey line being this real-time curve. and we've seen quite a bit of steepening in here, about 20 basis points of of flattening across this curve. So, you know, with regards to what Carney could say, he could just either say we can a rate hike this year is possible but not likely, and then maybe when we do finally hike, we might hike more aggressively because we have to watch out for 2017 2018 inflation. In which case, I would expect it to be steepening across the curve, because they're not going to hike now, but when they do hike, they're going to hike more aggressively. So you should expect the rates along the back end of the curve to increase a lot more rapidly than the short end of the curve. But then, likewise, he's already kind of had that rhetoric of when they do hike, it's going to be slow and gradual. So that is going to be a bit of a surprise. But if he goes along with that, I expect the curve to stay quite flat. So I think it's mostly going to be a curve play. I keep an eye onto that because that's going to be an interesting event this week on Thursday. Obviously, Friday. I don't want to take away too much from this. Obviously, I did say the Bank of England is pretty much the biggest event, but not to take anything away from the non-farm payrolls. The jobs numbers this week are also going to be really quite important, especially because the last jobs numbers we get, or if I'm not mistaken, I think this is the last jobs number we get before the September FOMC, which the September FOMC is going to be really quite important, even though we don't have very much expectation for a rate hike. You know, if we do get something ridiculously high, maybe the market does actually start pricing in something. And I think the key number here, obviously, as always, is going to be the U.S. average hourly earnings. You want to take a look at if wages are increases, because if wages are increasing, because if wages are increasing, that's going to feed into the real economy, and that's where we actually start getting a spur up in real inflation. So I keep an eye on these numbers. They're going to be very key. Trading the volatility as ever as an intraday trader is going to be key for me. I do personally like trading this event, but like I said, you should, or like I always say, when you trade this number, the most important thing is understanding the market structure, because when the number comes out, it just loosens up the market. The market kind of trades within a very volatile range, but then eventually it finds where it would like to auction and trade. And that's, I think, the better move. After about half an hour, you get the real move. Really, within the first half hour, 15 minutes to half an hour, um, trying to catch a trendy type move is more of a gamble, in my opinion. So you're better off kind of scalping that market rather than going for the trend like move, and then wait a little bit longer. When you start seeing the volume come back into the market after about half an hour, that's, I think, the better trade, especially if you get a false move. Those are the best ones where they reverse. It usually takes about half an hour to an hour to actually develop. Coming into Friday, we've got the last thing on this week's Venture and Risk is the BOJ's Kuroda giving his monetary policy statement and conference. So keep an eye on that. Obviously, the yen being in quite a reasonably critical area. If we take a look at the yen, we can see we're currently trading around 123.92. We can't quite get above these 124.43s, which we've been talking about quite a lot in my weekly wrap-ups. This is really an area that we've been holding quite decent resistance at the minute. But if we put this into context, as always, just to remind you guys, obviously we have recently broken this flag. We're currently trading higher, but on a larger time frame, taking a look at the monthly, we are currently sitting above a very massive trend line. I've pointed this out to you guys quite a few times in the past, and that swing high, you can't see it at the minute, but it actually dates back to 1989. This is a structure that's been going back many, many years. So, the fact that we're certainly, still sitting above there is important. However, if I really blow this up, you'll see that last month we did have a particularly bearish. I mean, 2 months ago we had a particularly bearish candle. As always, we have closed and engulfed that candle, but for the time being, I'm still a bit wary of the fact that there's such a big wick to the upside, and possibly if we do get back below and close below 122 on a weekly time frame, then we could get some covering to the downside. Otherwise, this market is still looking relatively bullish. Right. So now let's take a look at the two markets that I tend to trade most often. As always, starting off with the Eurostoxx 50, Eurostoxx 50 index futures. So what we have here is a daily market structure in the candlestick chart. As you can see, we've been talking about this flag formation for quite a while. It was last week we opened up pretty much back inside that, and as we said, we were expecting for there to be a little bit of a move down and possibly a bit back up. It didn't quite stop in the areas I was looking for. We did have intraday moves off those areas, so don't get me wrong. At the 38.2, around 48s to 45s, we had a pretty decent bid back up. Again, around 27s with a pretty decent bid back up, and then come into Tuesday, we held the 27s, and then from then we've rallied back up and closed above this key trend channel, or should I say flag resistance. So we've closed back above that at 36.01, and at the time being, I think this area is going to be really quite critical just below it. Obviously, if we take a quick look at the market profile, you'll see what I mean. So we closed around this area in here, and this area just below here is looking particularly important, especially because we have this week's value area low at 35.96, last week's value area high, sorry, at 35.92, and then going back to this week in here, we had it at 91s. So between 91s and 96s, this area is going to be quite pivotal for me. So long as we're holding above this area, that is for me the key indication that we're going to, or at least move quickly back up to this really key value area zone of high volume at 36.40, which is also, it's the weekly VPOC and also the POC of the week just below that at 39s. So I'm looking at this really key area. I wouldn't be surprised if we made a move back into value, but held VPOC, which the VPOC is currently lying at 35.74s, which just kind of coincides in there with that weekly low just below that. The weekly low here, as you can see, is at 75. So 75, 74 being quite crucial if we come in, just jab at it, take a little bit, and then make our way back up and hold above this area. So this is going to be the key pivotal area for me. As long as we're above here, I see the market auctioning up higher. I'd be playing for that auction up higher towards this really key value zone. I'd say around this area, you'll probably see, I think, a small reaction, at least a very small reaction off of this is a very, very big value zone. So, when we get up here, I'm probably looking for, at least if I'm long, to get out, or if I'm flat, to probably get, somewhat short for a small scalp play. But if we get back above here, the market's likely to try and attack that value area high at 36.58. And then before there, we've got, obviously, coming back to this week, that weekly VPOC around 36.75, which was very important on that week when we broke through there. Moving back up, we've got 36.96, which is that weekly high, and then that other weekly high at 37.14s above there. Now, in the event that we don't get above or stay above this area and we start printing quite a bit of value back in this region, I think there we're in for a little bit of trouble in this market, because now it's sucked in quite a few people long. And if we're building quite a bit of value back inside last week's value area, I'd say there's a strong argument that we'd probably make a move back below this VPOC. So any time spent in this value area shouldn't be, at least for me, shouldn't be more, I'd say, than 2-3 hours. It shouldn't really be here for a very long time. If we start building TPOs in here, I'm going to get quite wary for the bull side, and especially if we start using 74s as resistance, I think we get quite a vicious move back down to test that value area low at 35.44. Now through there, if we're holding through there, the next real areas are these 35.27s, as we've said before. I do actually really like that value. I forgot to mention just below that we've got a very key LVN, so low volume node at 35.43s. So 35.43s and 44s looking quite nice anyway, just for a short-term scalp. But if we get through there, I could see this market making its way all the way down to test that closing gap which we've left. If I'm not mistaken, it's at 3507s. I'll just check that really quickly for you guys. The closing gap is at 3509. Sorry, I'll just have to move that line up. So it's at 3509s. We have a closing gap which we've left, and a really poor low, really, a really poorly auctioned low, in my opinion. So I mean, it's not unheard of if the market does come and test this area. I wasn't really feeling all that comfortable buying it up last week, just because I mean, come into Tuesday, Wednesday, and the rest of the week, just because we left that poorly auctioned low. But the market can obviously leave it. I just wouldn't be that surprised if it went down and fill it from up here. So that's currently the market structure on the Euro stocks. If we take a quick look over at the bunds, we currently have this market structure as we can see here. A lot of the traders, a few techs, have been looking at this inverse head and shoulders. So this left shoulder in here, head and a right shoulder. We broke that neckline pretty much at the beginning of the week. So we were basically closed above that neckline beginning of the week. We had a bit of trouble in here, had a bit of a battle around the neckline on Tuesday and Wednesday, and then finally on Thursday we closed relatively high, and then Friday after month ends closed with quite a bit of a doji in this area. So overall the market does look short term quite bullish. However, I do think, as an intraday trader, if you're trading this in the medium term as a swing trader, then okay, this structure does offer you a bit of value. You can take a position and then look for that, move. But as intraday traders, and I'm talking to the traders at Futex, and I was talking about this particularly with Simon, it doesn't really offer you all that much value. To have this in the back of your head that there's a massive inverse head and shoulders, because that could give you a certain bias and a certain way of thinking during the week or coming weeks ahead, which it doesn't really offer that much value for an intraday trader. I mean, if we get an intraday bearish setup, but you're just thinking in terms of, oh, this has got a 6-point target to the upside, I need to stay long, it's not going to help you, and it's not going to help you trading in the slightest. So I think for purposes of an intraday trader, I'd say try and keep it in the back of your head and not at the front of your head. So in terms of context, if we get back below this neckline, I'd say that's important, and then maybe you should start positioning short. So a break of that inside day to the downside would be really, really key. So we've got an inside day from Friday. A break of that coincides with a break of the neckline as well, and I'd be really keen to play that to the downside. Obviously, there's an inside day break to the upside as well, which I'd suspect would also be decent, but I would be more keen to play that move to the downside, because there's probably been some positioning for that inverse head and shoulders, and as an intraday trader, I think there'd be good flow below that inside day low at 153.67s. Now, in terms of levels to the upside, because we won't be able to see many levels on the profile unless we go really back. We've got the 155.13s, which you can see is just ahead of this value area zone, this box base area. Once we start printing and holding above these 13s on the dailies, I do not see it having very much trouble vacuuming and basically doing this whole box region all the way up to 156.69s. In my opinion, I don't think there's much holding it back. So that's really going to be where the main battle is taking place. If we fail there, well then, there's a good likelihood that we just kind of make our way right back down and hold this massive range area that we've been building. And it would probably make this inverse head and shoulders a little bit null and void. If we take a look at the profile now, we have a similar kind of setup like last week, where we're closing outside of the weekly value. So we closed last week, for example, outside of this weekly value, and then we came on the week, as we were talking about last week, we came down, we tested at these 38s to 35s area, really crucial, 35s being a weekly VPOC. Yes, we did get through it, by, it seems, about 7 or 8 ticks, but overall we held and left that area as a buying tail before making our way higher. Now, we could have a similar situation where the market kind of opens a little bit out of value, starts auctioning slightly lower to test that value area high of the week at 154.10s. And if we can hold here, I'd be looking for the market, to auction higher. Obviously, we have a bit of a, value cave in here. Just pointing out, we've got a bit of a cave in here, low volume and low TPO counts. So, it wouldn't surprise me if we kind of filled this out first before we made our next move. But keep that in mind. That could also be a good setup. If you fill this out, a lot of buyers just building here. We get build a lot of positive delta, and then at some point we pierce back into value. Late on in the day, that could be a very interesting setup and one that I'd be very keen to trade, to the downside. Any moves to the downside to this value area high, I want it to be pretty swift rejection, and for it not to really come and test it again. So if it keeps testing it, keeps retesting it, keeps retesting it, I'd be a little bit wary of that and possibly looking for it to come back in. If we do get back inside, we've got the weekly VPOC all the way back down here at 153.58. So nothing really holding us back from testing all the way back down to here. And obviously the weekly value low at 153.46, just ahead of those value area highs that we spoke about at 38s and 35s. And below there we've got a weekly VPOC at 53.20s, and below there we really don't have much holding us back to test all the way back down to these 152.70s and 72s, which is a very key value area crossover. So all in all, some decent structure. I think some decent opportunities are going to arise this week. Obviously, it is the middle of summer, so the volume is going to be very, very low. And this is where our risk and money management plan comes into perspective. Just to go through really quickly what I'm looking at, we've got about 5 venture risks on Monday, about medium relevance. I'm putting a little bit less risk allocation. I think for other traders, maybe put a little bit more on Monday, because Mondays we've actually seen a little bit of decent volume. But in my trading plan, I'm putting a little less risk allocation because I find after the weekend I come and trade on Mondays, and Mondays, for some reason, I don't kind of snap into it straight away. So I'm giving myself a little less risk allocation. But if I find that I'm, getting into the zone quite quickly and my focus is up to par, then I'll probably give myself a little bit more chips to play with. But just to start off with, I'm giving myself a little less risk allocation on Mondays. Tuesday we've got 2 event-driven risks. Again, medium, about a medium, I'd say, relevance, 15%. Wednesday, 6. Again, medium, 20%. Thursday we've got the, if I'm not mistaken, Thursday we've got the Bank of England. So high relevance, I'm putting about 25% risk allocation, and then 30% on the non-farm payrolls on Friday. And that's just personal preference because I tend to trade relatively well over the jobs numbers. Right, well, thank you very much for listening. That's pretty much my weekly trading roadmap. I'll be with you guys literally for the rest of the week because I'm doing the daily aftermarket debriefs. So that'll be at 4:45 every day. On Tuesday at 12 o'clock, I'll be doing a price ladder analysis video, so stay tuned for that. I'll be going through a setup in the Eurostoxx 50, one that we saw on the 24th of July, and there was quite a bit of, I'd say different price action dynamics on the ladder. I just wanted to point that out. Possibly we can all learn something together on that, so please tune in for that on Tuesday. And then as always on Friday I'll be doing my weekly market wrap. Well, thank you very much guys for listening. Hope you guys have a great trading week, and good luck. Bye bye.